at the Gems and Jewellery Banking Summit, brought to you by GJC. We'd like to thank our title partner, World Gold Council, powered by Sri Kunj Kolkata and supported by Bangalore Refinery, Mukti Gold and Diamonds, Yes Bank and Lakshmi Diamonds, Bengaluru. It's time for our final panel discussion. Ladies and gentlemen, please do settle down. I think the amount of enthusiasm, the amount of participation, the amount of energy that is being shown over each of the 3 sessions that we've had, and I'm sure over the next 4 sessions, only means that we need to have a 2-day banking summit next time. Okay, thank you so much, ladies and gentlemen, for your attention. We now put the spotlight on risk management mechanism. Our first panelist, Mr. Manish Gavaskar, is Head Bullion Sales, SPV Treasury, RBL Bank. He has rich and varied experience of over 22 years across treasury functions. He joined RBL in August 2015 with the primary responsibility of setting up the bullion business pan-India. Within the span of 3 years, RBL Bank spread its footprint across the bullion industry and has been increasing its market share year on year. Ladies and gentlemen, please put your hands together for Mr. Manish Gavaskar. Ladies and gentlemen, can I have your attention, please? And if you could please all take your seats. We already have our first panelist on stage, and I request you to kindly settle down. Our next panelist is Mr. Mehul Thakkar, Business Head, First Rand Bank. Mehul Thakkar is currently the Head Business Development Financial Institutions at First Rand Bank of South Africa, a seasoned bullion marketing professional with over 2 decades of experience. Since joining First Rand India in 2011, he has played a pivotal role in elevating the institution's standing in the financial landscape, especially in bullion. Mehul brings unparalleled knowledge and a proven track record of success to his current role. Please put your hands together and welcome Mr. Mehul Thakkar. Mr. Himang Sharma is Director Mid-Corporates Group at CRISIL Ratings. He has close to 12 years of experience in varied sectors. His area of expertise includes sectors like auto components, FMCG and agriculture-related sectors, gems and jewelry, and transport and logistics. He has handled various assignments and engagements within CRISIL Ratings and has managed teams and clients spanning the North, West and South regions in the domestic market. A warm welcome to Mr. Himang Sharma. Mr. Avinash Gupta is owner and partner of Manraj Musaddal Jewellers, Hyderabad. He has been a COA member of GJC from 2016 to 2022, during which tenure he played a vital role in the gems and jewelry industry by addressing key issues of the industry like GST, PMLA, etc. In the past and even today, he's been a part of several key associations of the trade and gives us valuable inputs to these bodies. A warm welcome to Mr. Avinash Gupta. And ladies and gentlemen, our distinguished panelist is none other than Mr. Bijayananda Patnaik, former Executive Vice President and Head Gems and Jewelry at Industry Bank and now a banking expert. Mr. Patnaik started his banking career in 1984 with State Bank Group. He moved to ABN AMRO in 1997 and 2010 was appointed by the Managing Board of ABN AMRO as Country Executive India. In 2015, when ABN AMRO closed its operations, he successfully helped sell the assets to IndusInd Bank and was head of the global diamond and jewelry industry in IndusInd Bank from July 2015. A senior member of the management team as a core executive team member. Now having left this bank, he is now an industry expert in banking and finance. Ladies and gentlemen, over to our moderator, Mr. Bijayananda Patnaik, to take us through this session. Gentlemen, over to you.
Thank you, sir, for your kind introduction. Thank you, all the delegates. Thank you, panelists. So we start this session, which is the last session, and suddenly we see there is a less energy now in the in the market and in the conference. So the risk management mechanism, probably that is relevant for this business, because risk management only decides all other things that you have discussed. If the risk is acceptable, then the other things become easy. Pricing and lending, everything becomes easy. So risk, though it is in the last, maybe it is in the last basically because this decides the rest of the things. So after everybody has discussed, if we discuss this brings sense. So the first topic they wish us to discuss is regulatory challenges for operational process. So I will request our panelists who will like to take this question. Probably you will take it, operational, yeah?
So, good evening, good afternoon. My name is Manish. So, like Sir said, risk is the one part which will decide all our aspects in building this business and growing it up as well. So, we were speaking outside and Avinaji told me a very simple question is, here we are here to help each other and to know how we can act as partners, business partners, grow each other and grow in terms of compliance and regulatory requirements as well. And nowadays, if you see, a lot of banks keep saying that we have compliance which needs to be catered to. We have regulatory requirements which need to be catered to. Yes, the regulations are changing, and every day it is changing for the betterment. When somebody puts up a case, it's on the past experience that is coming out. It's on the past experience as the regulator has seen, monitored, maybe worked together for years together, and then put up a framework within everybody has to work in. So regulations changing every now and then are there to be supported and to be worked accordingly. So Avinash and me and Mehul, everybody was speaking, yes, how do we adapt to the changing regulations? How do we get ourselves abreast to the new regulations? And I think as and when you see a lot of business models change, a lot of avenues change, a lot of opportunities open up for us. So when you say regulations, like RBI has put up various regulations taking into price, like if you see the rupee depreciation, appreciation, RBI has been regularly monitoring it, gauging it across the world, and still we've been better monitored in terms of regulations. So regulations and risk management is nothing to be feared about, nothing to be thought about. It has to be just complied to and worked around and worked with. So I think we need to be adaptive to the factor. Even this business function needs to be adaptive, open to changes, and that's how I think each one of us can talk to our bankers, understand what requirements are there, and if it meet up with it, I think it gets easier for every one of us.
Will you add something?
Yeah, thank you. Hi, this is Mehul Thakkar from First Rand Bank. To add to what Manish just said, and what we understood from a jeweler's point of view, the new entrant, large jewelers are getting sufficient financing today and they are getting sufficient support from the banking system. But today we are here to help the newer ones, the smaller ones where the penetration is less. So I will go back to my experience where, in 2005, 6, 7, banks were only trading in gold. They were not lending in gold. Very few were there and only PSU banks used to take that risk. But I have understood that even though you are getting new and new regulations in place which are filtering the negatives out of the system, but if you have right intent, or I would give you an example of a large jeweler today, but at that time they were in growing phase. So at that time, they were following all the regulations to the T. When we went to meet them for working capital facility, we saw the transparency, we saw the balance sheet, we saw the understanding of the business. And after that meeting, our team went and proposed that if you have bank limits with some other bank, we are ready to take over that as well. And today that jeweler is one of the largest. Similarly, we had some interaction with Pune-based jeweler, who was growing at that time, had a single store. Today they have multiple stores. So it's important that you stick to quality. These regulations will come in place, but if your balance sheet is right, if your market KYC is right, and if your understanding of business is right, you will get the desired loans. But only thing is, stay true to the system and let the system assess you. Your CIBIL and all will only spoil with multiple loans and all, but not with your correct balance sheet putting and correct picture which is in front of the system, because now there are so many jewelers taking loan. You showing lesser profit or higher profit can be easily figured out because the experience of a banker tells him what the real situation is. So stick to the basics and talk the correct picture, and that's what I would say. Regulations will help you only.
Thank you. You will be taking this, or you will take other question?
Maybe I can just...
Add whatever if you can.
Sorry. Yeah, so this is Himank from Crystal Ratings. So obviously the experts have spoken from the banking side, and I think from a regulatory perspective, as we've understood, things are changing day by day, and there are things which are becoming stringent, compliances are becoming tougher. But as businesses grow and as the landscape changes, I think we've seen most of the businesses adapt to it. And today, at least from a rating agency perspective, what we understand is that most of the companies that we rate, most of the companies that we've seen over the last few years have become extremely compliant, and that reflects in the credibility that they have in the market. So that's what I wanted to add. I think the credibility of the customer speaks for themselves. That is where at least the rating agencies stand today.
See, what I want to say about this is, like everybody, when we are talking about is those people who are already there in the system and they are maintaining their CIBIL and all, everything is fine. What we need to understand is, and what basically the thought process which I was going through the entire day, and everybody is worried about, like nobody knows, there are a lot of people who wants to come to the banking system, but they are not coming into the banking system. Like when we are talking about the new people coming in and they are getting loans and all, but there are a lot of family-owned jewelers even today. They are funded by themselves in their business, but they are unable to get into the banking system because they are not guided properly, or they have the apprehension on their mind that because of this we are not getting the loan. And when they approach a bank, the banker will say, sorry, we cannot give the loan. But they are not telling them why they are not getting into that particular thing. Instead of just saying somebody, rejecting somebody, if they want their documents to be properly made in that manner that they get the loan. Today, what I personally feel is, when I look at jewelry industry is the most trusted jewelry industry wherein the loans are the safest. Whatever has happened in the past, that baggage is carried on by all the bankers. Was sometimes it was hand in glove with the bankers and the jeweler, or it was the intent of the jeweler to dupe the banks, and that has happened. It is not that. So we cannot just say no looking at only the documents which were presented to them. If they would have been taught properly, they would have brought the documents in a proper shape. And as rightly told by Mehul Bhai, that they see lot of things, just not the balance sheet. Balance sheets can be cooked, but the culture of the jeweler will not be able to cook. So what I personally feel is, when we are looking at the risk management from the credit side, it should be looked into the intent of that particular person also, and they can be taught. Definitely regulatory things are to be regulated in a proper shape. So that can be done. So I think we should come out with what kind of documentations, like as you are from CRISIL, so what kind of things you look into the credit of a particular jeweler or anybody who is approaching for loan. That kind of things, if you can educate to the jewelers, I think that will be much more beneficial to come out with, and a right kind of atmosphere can be created.
Thank you. Let me add a little bit to clarify on these topics, like my panelists have said. To my credentials, I have worked for 30 years exclusively in diamond jewelry all over the world. So I have seen new companies coming and going up, and to our topic, regulatory challenges for operational process, we have to understand is to divide it into 3-4 parts. What is regulatory challenge? First is there is a regulator. Every country has a regulator, if it's India or anywhere else. And complying with the regulator's guidance or guidelines is your right to exist. Without that, it's very difficult to exist for a professional organization like bank, because you have to follow the regulatory guidelines. That's for given. What banks should do, banks should cut it to simpler facts and communicate it to their customers, who are existing customers or the customers who are coming. In gold, I have seen that is all the banks are not the nominated agency for dealing with gold. So they give their SBLCs, and some another bank gives them the gold metal loan. So in that context, RBI has said how both the banks should jointly assess that so that there is no double finance. And these circulars are really available in the open forum. So if the new customers who are come to banking, maybe your association or your existing bank in other business or your colleagues, they can help you to say these are the processes. If you know the processes, then it becomes easy for you to approach a bank. I have seen quite often people did not come to a foreign bank when we were in ABN AMRO for 20 plus years, because they thought probably big banks, they don't look at small customers. It's not like that. Everybody looks at, but you have to understand that we cannot challenge the regulation, that you have to live with. So that is what if you do. Then the second part you all talked about as about your rating. Rating comes next. And everybody, because of your credit card or other activities, you have some sort of a credit score. And that credit score gets developed as and when you start borrowing. If you have a zero borrowing without any credit card or without any personal loan, then maybe you don't have a track record for that. So that slowly can develop. That's not very critical. I don't think bank refuses a loan because of that. Then the second you all talked about, that is why we go to a rating agency. For very small loans, a rating is not mandatory. When you have a minimum quantity of the loan, then only the rating is required. So if you are talking about completely new customers, anyway, there is no rating required to start with. So slowly you can go and get a rating in a year and a half, so that you have a track record. And the operational processes, that is again, one is derived from the regulation. Another is the banks make their own regulation, which is in keeping with the essential regulatory guidelines. So it is not very difficult to comply with that if you wish. However new you are, you can understand that and you can probably address that. I have not seen a business gets affected because of regulation. Yes, regulation means, or any law means, it's a challenge, because they have found out there are some use or misuse of a system, so they create a regulation. So those regulations are easy. It can be put into simple facts, and that should not be affecting the business. That's my take on this. So we'll move to the second question that Council has given us, the compliance requirement to upliftment of this sector. Before that, I will tell you that compliance is not something for the upliftment. Compliance means you have to comply with that. So, but why it is for the upliftment? Because if you are compliant, then no question comes to you. So we will start accordingly from the bankers, starting with you. What are the compliance requirements and how this can be addressed so that this sector is not bogged down by a lot of compliance requirements?
Like I said, sir, regulations or compliances, all are here to help us out, to streamline processes, to smoothen processes. when we mean compliance is that whenever we go to a particular banker and we need help, it's a relationship that you are building onto. So nobody, a first time banker would always want to build a relationship and start a relationship, like a jewelry store. When I walk into a jewelry store, I want to be trusted and I want to gauge that trust with the customer who's walking in. Similar is with a banker. So a lot of times the knowledge sharing has to be done from the banker. I understand that yes, there are certain set of documents which are required for starting any process. Once that is understood, there can be support from the bank, there can be support from the customer stating that these documents can be provided in a particular timeline. Once these documents are provided, given set of documents which are availed or put up on the site, or if a relationship manager puts it across, I think complying with this document makes life easier for both the customer as well as the banker. And it's a very streamlined process. I think most of it is either online available or it is available on the company website or it is available. It's just that the set of documentation being provided has to be clean, neat and up to the mark. It makes life much more easier. I wouldn't say it is compliance, it is just a business relationship that you're starting. And once you start on a clean slate with everything put on paper, and like Ashish Petty said, your banker is your doctor. You have to be with him, you have to tell him everything, you have to put it on the paper. It becomes easier for him to put across that these things can be met, can be adjusted, and how we can work forward. It is not that a bank wants to reject the case on the first basis itself, or bank wants to approve it on the first basis. It's an ongoing process. If you tend to give me some documents, I will enhance your limits. Maybe your expectations are that I need a 10 crore, but I can come back to you saying that, sir, it can go up to say 12 crores or 15 crores basis these document providation, because your set of requirements are easily met with us, and that's how the relationship starts. So I don't see there is an issue. It's an understanding issue which needs to be spoken about, and if dealt with, I think with the support of a banker and a customer, I think it can be tapped about.
Thank you. Thank you.
To take this forward, I think it's a wonderful example where a banker will ask you for a monthly statement, stock statement, monthly sales statement, quarterly statement, and a yearly CMA. That gives them the idea of where you are standing on monthly basis, how your sales are doing, and how your projections, what you had given last time, have fared in the next financial year. And those compliance are very important, because internally also as a banker, they have to put up a report because it's public money. It's not their money. So they are responsible and answerable for loans given to the jewelers or any industry for that matter. So these monthly statements, quarterly statements help the banker to understand what's going on, and the transparency that comes out on those statements, like Manish said, we can increase the loan if we see that TAT is better, if we see that there is a better understanding of the business and business is growing better than expected, then the limits can be higher or lower based on the situation. It can be a situation where sometime, like today we are at all-time high and sales will be slow. So it's good to cut down on your inventory rather than just holding on to it and bearing costs. So these things are very important to be thought at that point of time, and monthly and quarterly checking of these important documents is very important for the industry and the bank. It will only help the entire ecosystem and not losing out for anybody.
Thank you.
So I'll just want to maybe take two questions together. One was obviously Sir's point with regards to in terms of how rating agencies maybe assess the creditworthiness of borrowers, and second is obviously how do we ensure compliances, or what are the kind of compliances that we need from our side apart from whatever the banks do. So the most important thing being here, in order to assess anybody's creditworthiness, the standard process that we follow is three pointers or a summarization of three key pointers, which is, one is the main business profile of the company, second is the financial risk profile of the company, and third is the management risk profile of the company. So business risk profile is nothing but the assessment of how the business is managed in terms of what is the positioning of the company in the industry, how well the sales have grown, or is the company performing as per the industry standards, better than that or weaker than that, whatever it is, will be assessed on certain subjective parameters depending on the industry that we look at. And this is not only specific to gems and jewelry industry, this is purely everybody that we assess. Then comes, and obviously within the business side, we also look at the operating efficiency parameters, which is return on capital employed, which is your operating margins, how much profits you're generating overall, and maybe other metrics which are specifically, let's say, which is a profit that you're generating through normal sales, while inventory gains could also be there. So those assessments also need to be made. Then comes the financial assessment. Financial assessment is nothing but the ratios that we look at, so which is generally your balance sheet ratios, which include, let's say, something like a gearing ratio, which is total debt by net worth, or some other factors which are total, or maybe your interest coverage ratios or liquidity ratios, which we assess, which are purely simply mathematical calculations that anybody or everybody knows on this financial side. The third most important thing is the management risk analysis, which is very critical as an input specifically for gems and jewelry industry, because all through the day what we've heard is that the bankers have maybe been slightly skeptical in terms of this industry in the past, and there have been certain instances in the past where we've seen some issues. So management risk analysis becomes very, very critical, because if there is a track record of the management to support the business, to help grow the business, and there has been a particular intent to showcase credibility and growth all throughout, that becomes becomes an input for us that the company and the management are really interested in or invested in going ahead as a going concern. So that gives a lot of credence, and I think sir also alluded to the point in terms of the promoters or the management being the key people there, because like balance sheet is just at the end of the day a 31st March balance sheet figure, which anyways could be different from throughout the year numbers as well. But what runs behind those numbers is the management's intent or the employee's intent. So if that is good, and if that has been always good, and that shows a sustainability and trend of comfort, that gives a lot of comfort to the rating agencies as well. So all of these 3 points then combine into a rating that we arrive at, final credit rating, which is arrived at. And that credit rating obviously is driven by RBI's parameter. So it's not that we as CRISIL will have a different parameter than some other people. So RBI as a regulator comes in here, and all the rating agencies will have a similar scale, a 20-point scale, which is on the long-term rating scale. Now moving on to the second point, which is on compliances and the other things that we assess also. So in order to assess all of these things, it is similar to what the banks take as an input. It is nothing new that we'll want to take from the company, because whatever assessment is happening on the financial side or the liquidity side or on the business side is already being done by the bankers also. So it is similar to the process that the bankers follow. But yeah, there could be maybe different questions that could be asked, alluding to the maybe characteristics of the business. So depending on how different the business is, maybe from the other businesses in that specific segment also, or how differently it is being run, there could be certain tweaks that we require as compliances. Otherwise, there is no separate compliance that as a rating agency will require from the gems and jewelry industry.
I think on compliances, the bankers have spoken, so I don't need to speak on anything on that.
I also feel that both Mehul and Manish have already spoken about the banking requirements and why banks require these paper like stock statement, etc. And CRISIL have already clarified that is how do they do a assessment of a credit and the rating. That's there. Maybe one question could be there in the compliance about KYC, which sometimes the customers find it difficult. I'm sure this must have been discussed in the other session, but to just add one more, other than what is the required for the credit facilities, KYC in India or many places are only having 2 parts. One is you have to have your identification of all the people, and now it is easier with Aadhaar. And the second is your address proof. I think these 2 aspects, if you can address, then banks can be will have no problem. The other things in KYC, they're saying, okay, what are the transactions, whether the banks look at the end use of funds, maybe in the loan side. So that also, if you see, then the whole thing that we told, that would probably be the entire comprehensive checks banks do. When you enter into a bank, they say they want to identify who you are, where you live. It's very simple. You have to give a document. They tell you to give this. And then once you have the account, the banks want you, ki, what are you doing? When you are taking a loan, like Mr. Thakkar said, very relevant, ki, what you say to the bank, this is my business plan, and this is what I am doing. When you are giving a stock statement, that is telling ki what you have done for your business plan and how much you have progressed. At the end of the year, you are saying what had you proposed and how much has been achieved. If it is overachieved or underachieved, why? What has happened? What has gone wrong? Like we know 2 years ago, the diamond exports were 19 billion. Last year, it was 10 billion. But you don't get very worried about that, ki why it went down. You know ki the markets went down, so the business went down. So the issue is not to be thinking it is a elephant in the room. It is really everything is very simple. If you understand, if you like from this conversation, if you get the points, and if you have any queries at the end we can discuss, then you will know that it's not difficult to deal with this for any of the domestic jewelry businesses in India. Thank you. Next topic we will go in the similar pattern, probably, that's monitor risk control strategy by utilizing emerging technology. Risk control strategy. So I think we should start with you because it's in the business side. How do you do your risk control? Then we will come to banking side.
See, today if I look at the tools to control my risks, one major part is hedging. In case if I am hedging my risk of the price fluctuations, the volatility in the price, I will be feeling safe, as well as the bankers will also have an feeling that their client is taking all the parameters to control his risks of losing out on something. Like as he rightly said yesterday, there was a huge price jump yesterday happened in the late night, and in case if somebody is having an open position, that will definitely affect his profitability. So with the availability of things, definitely risk can be averted by taking the hedging as a tool.
Thank you. Thakkarji.
Yeah. So I think hedging is one important aspect of this business. I can say that I'll be a little rude here, that if you just want to go one side, then you don't need even business. You can just take open position and make money because you know that gold is going up. So that's not business. Business of a jeweler is complete hedged position, and your margins are on making charges and retail sales. And that's what your basic understanding of business is. In 2012-13, we had seen gold touching 30,000 in Indian rupee and 1911 in international price, and for good 5 years it didn't go up, and on the downside it went to around 1200 or touched at 1045 as well. So we have seen it took good 5 years to come back to the rates that we have seen in 12-13. So there is a possibility that you lose on that, and again we are seeing the cycle of another bull run right now, and there may be a case where it touches 1 lakh and touches 70,000 again after touching 1 lakh. So we never know. And that 170,000, and the guy who entered at 1 lakh will see 70,000 for another 3-4 years, and will he be able to hold that inventory purchased at 1 lakh? So it's a proper, like he correctly said, it should be a proper mix of hedge plus self-inventory. And as we also spoke about regulations, RBI has, as recent as on 15th of April, come out with a circular where you can hedge your positions in overseas market as well. So if I've been also hearing that there is a M2M related concern, or if you hedge, your costing goes to 11%. Now with this, you hedge with the same bank's OBU. On one side you will be positive, on one side you will be negative, your M2M is taken care of. So RBI is also working on giving you an area where you can hedge your positions. And it will only help the businesses, because as you grow big, you need to be hedged and your margins have to be constrained to, the actual business that you're supposed to be in, rather than taking those positions, because for taking positions, you don't need those businesses. That's what I understand.
Manish, you will add something?
Yeah, like Mehul said and Avinash ji also mentioned that speculation is a different game, hedging is a different game, business is not speculation, and it has to be a hedging game. It is more so that maybe I am there for decades together into the business, but the volatility that somebody has seen over the years might not be the same in the current year. So the volatility will be different from year on year and for decades together. So it's always good that you derive onto your cost price. You understand what markets you are playing into, what spreads you are playing on. And hedging, like Mehul said, it's the best tool where you, if not say 100%, if you can go at least 80%, 70% hedge your portfolio, and you leave it up for 30% or 20% for speculation as well. I'm not saying that you shouldn't be doing that part as well, because it's a business momentum. But at least stay hooked onto, and there are so many other products which are available with IIBX, with your Gift City branches, lot of avenues and products are available. We were speaking to Avinash ji and we said we should, the industry should make certain awareness where people do a learning session for hedging themselves or covering their risk profile. And I think that way your exposures also and your risk appetite also increases and your business potential also increases.
Himang Bhai?
Nothing major that I would want to add. I think hedging is one of the most important things that we also assess, because until and unless you are covering your positions, it becomes difficult to manage your profitability as well. So that is where I was initially also coming from, is that the profits from the business should actually be coming from your operating nature of business instead of maybe just inventory gains. So that is something that anybody would understand, that is one important tool. Apart from that, I think maybe in terms of the inventory management as well, what we've seen is most of the jewelers, at least in the recent past that we've seen, is they follow an inventory replenishment model. Maybe effectively what they do is that once whatever inventory is sold, they replenish or purchase exactly the same amount on the same day. So that also is sort of a mechanism of hedging itself. So that is a natural hedging sort of structure that they adopt. So which anyways I agree is similar to whatever we are talking about as of now, instead of maybe following a particular cost addition in the form of hedging. So even natural replenishment model works is what our understanding is.
That's the same way. Like natural replenishment is also a kind of hedging only. It's not an open position.
Just to add one more point here. So earlier, when there was a 180-day cycle, at the end of 180 day, you were forced to close the position. And you were supposed to hedge it on MCX. That was the only avenue. And most of the time it used to be in discount during the time when the market is not in demand. So now to cover that situation, only RBI has come up with this OTC hedging mechanism, which will help you to hedge your currency and gold and international prices. So you don't lose out on that discounts that are prevailing in the market, which is very important for the industry to understand. And your M2M thing will also be taken care of. If you're running short of M2M, hedge your position. So both ways you get, one side you're positive M2M, one side you're negative. And if possible with the same bank, it'll be no margin calls.
That's a very good thing which is communicated by you. I think majority of the people doesn't know this, that overseas you can hedge your position, and that way they are very much covered.
Thank you. I think this was a very relevant point for the business. I have seen the gold business, not only India and overseas. Overseas is having a lot of gold leasing on fixed terms. So that becomes very easy there for the people to sell. I'm sure sometime it would come. And if we start with our gold business, if I tell you many years ago when we had gold control, all the time it was shown, like Himang said, on the replacement gold. All these shops were showing their gold as the replacement gold. Some of you who are very old companies, you will see, you will know that it was all replacement gold. one of the reason why, though we were in this business all over, but we were not in this business in India because of the replacement gold. And in the major retailers I have seen in India, they always tell me, like Himang said and Gupta ji also corroborated, that is, these are all replacement. I have 1,000 crore my capital, which is there in the gold at this price. And if it goes below that, then I come at a risk. And every day, whatever we are selling, we are replacing that gold so that this is not changing much. Yes, these are all ways in which this business has been running, and the bankers have been accepting that, telling that yes, this way, if you are doing, show me the books, how when you had purchased, and if it was at this price, now it is this price, and sometime we have seen gold price going down, then how much is the loss and how are you going to deal with it? So this is for you because capital is yours. And the topic also is about the control strategy for utilizing the technology. Technology also because in the past we were having only one stores. For a long time, if we are telling GGC, we were having specific jewelers attached to specific markets. And they were not all these jewelry retail chains. In the recent, I call them Amar, Akbar, Antony, these three Kerala people started with the retail jewelry like Jaya Lucas, Malabar and Kalyan. They did the big ones with a lot of expansion, and we are seeing corporates are also there like Tanishq or Reliance Jewels or Aditya Birla. They are also coming into this line. So with all this, we have to get into a proper hedging like Mr. Thakkar and our other bank monies also said, and CRISIL is also looking at that, because hedging is also a major risk, because if you carrying a unhedged position and if you lose, then the RBI says because your client will lose, and if he has larger unhedged position, then you have to make provision for that. In the export also, in the domestic also, they would be telling for the gold, if you see. So that is one aspect in your risk management and how you can deal with it. And already our panelist has told you the new circular gives you more room to operate. You should also look at how to do inventory management when you move from one stores to multiple stores. Then how do you check the inventory and what are the technology you should be accepting so that you know all the day-end stock details, and also some physical verification. Today, other than physical verification, you don't have. Many people have got it in shop, so they are checking that. And the best way is to growth is to go really for multiple stores and go to different markets. And today, that's also one of the advantages the industry can avail. So if you have any questions, we can take on these topics, because otherwise we did. And Gupta ji will go. We have delayed the previous session, so I have a responsibility to make sure he doesn't miss his flight.
Good evening. Thank you for a wonderful session. I have a question for both Himang ji and for the bankers. If you say that Reserve Bank has given a broad guideline for rating, how is it that 2 or 3 different ranking companies or rating companies have different ratings? And my question for the bankers is that different rating agencies rating, do you attach different weightage, or you take it at face value because they follow Reserve Bank formula? First, Himang ji.
So I agree to what you said, specifically that there is a broad framework that RBI has given to us in order to assess the creditworthiness. So what happens is that there are 7 accredited rating agencies today who are working in the market. So everybody will have their own internal structures and processes, and everybody has a different kind of background or maybe the timelines of assessment. So let's say CRISIL started this business about 32 years back. So we have a longer track record of all the corporates or maybe people who've been working with us for a longer period of time. So our default statistics, our rating transitions. So basically, what is the rating movement? Maybe upgrades, downgrades, or maybe ratings moving to downgrades. Defaults. Would be very different from some companies or agencies which would have a very, very shorter track record. So their basis, this assessment specifically, we would arrive at maybe different internal ratings or maybe the external ratings that we give to the client. So it could vary because of the different internal processes and the kind of structures that we have. It could vary internally because of those things specifically. But the broad guidelines will definitely remain the same.
Just a follow-up question before the banker's answer. Many times I have seen that some of the companies stop giving information and you stop the rating. And after a couple of quarters, a new rating appears on some other things. So how does this happen? Is there any specific process for this? And how does this is seen by the bankers?
So maybe to understand the question better, you are asking, let's say you are rated by CRISIL, you don't give information, you move to non-cooperation,
Yeah.
and you get some rating from some other rating agency.
Right.
That is you move to some other rating agency. Yeah.
Correct.
So basically what happens is RBI as a process has given a structure in terms of how do you look at cooperation and non-cooperation. So if information is not coming in, there is discrepancy in information, the rating moves to a non-cooperative category depending on the specific process to be
So
followed.
essentially, while moving, they stop giving you the numbers. That's why it goes into non-cooperation. They can tell you, no, we are moving to so and so agency.
Could be
That's
both.
why you are not giving.
Could be both. So it could be because the information is not coming, or basically they have intended to move to some other rating agency and they've stopped sharing information. Both could be the things.
But it is reported as the same thing. Stop sharing information.
Yeah, information would not be at the rating agencies, and specifically for me it is CRISIL. So obviously we would not have received the information or detailed understanding of the business, and hence the rating moves to non-cooperative. If you get a rating from some other rating agency and that is accepted by the banker, no problem. You can share the rating letter with the banker, and if they accept the rating goes on. Basically, regulations allow that.
Thanks.
I have a question.
One second. Let the bankers answer first. Then you can take your question.
Yeah, so just to give you a brief, we do take rating agencies' rating as a base, but we also have our internal assessment and internal checks in place, which help us understand what we have to work with. And with regards to this continuation and discontinuation, the bankers' credit look at it very seriously, unless there is some reconciliation issue between the two entities. It is taken negatively. Otherwise, if there is some logical reason which is well explained by the promoter and the agency, then it can be a different situation. So it's only about our internal assessment over and above the existing broader assessment that the agencies do. And there's also an experience with each and every agency, how they rate a particular industry and how they rate a particular company. Basis that also the calls are taken internal.
Essentially, it is your internal assessment as a priority.
Yes.
Which is reaffirmed.
Yes.
Correct.
There's one more question. This is from Mehul. Mehul, what is it when we are talking about hedging? A person is busy on a small firms who are having a staff of 10 to 15 people. They are working as purchase, sell, customer relationship. There are government factors of GST, TDS, everything is there. At the same time, now the hedging comes in the middle. Okay, and whatever they are buying, there is an amount which needs to be sold off. There is a cost which is involved in hedging. So a businessman, a logical businessman who is maybe a person having even 1,000 staff also, but this person who's doing it should be very intelligent. or should understand
I
hedging?
would just say it's about priority. Do you want to save your money or you want to just do, see where you have compliance issues, you have no option and that's why you're doing it. Think of hedging also as a no option thing because that's where you are rated. Like CRISIL is rating you based on your hedging skills and hedging capabilities as well. And also bank also looks at you with those eyes. I'm not saying hedge everything. I'm saying you take your calculations and you make your calls. But end of the day, it has to be your priority that your margins are your making charges and your retail margin and not your appreciation alone.
But there should be a certain amount of cash flow also which should be pending for the hedging part. When most of the jewelers in the past have done sold off rate cut and sold off their jewelry, and then they have internally or GML part of it, they've sold MCX and GML के लिए रखा हुआ है. So most of the time the money, the financing, यहाँ पे they are giving credit and there they are have to give the margin to the MCX on this side, both sides. So there is a lot of cash flow problems which is coming, because of which there is problem coming in the actual business. So is it how important and how much money in percentage value should be there in for kept aside for hedging, and can there be a perfect hedge?
So basically now there is a perfect hedge which has come up with this latest circular, which I just gave you the information about. Earlier there was no perfect hedge. Like I also understood the pain in the market that, you know, you sell at X rate and you are able to hedge at X minus something. So you're directly taking a hit. And that's why your margins get hit on the other side. But now since it is available, and it's also about understanding that it is need of your business and not need of a banker. Because if you hedge your positions properly, you will be able to show healthy margins that you actually have in your business. Otherwise, a lot of times your margins get eaten away by this volatility, which is a problem.
Sir, in a hedging, it requires 7 to 8% deposit to hedge in the MCX or any other modus operandi, because it's 8 to 9 lakhs rupees per kilo when gold is 75. And the another difficulty is the context changes in every 2 months. Sometime it is a 500 rupees premium, 800, sometime it is going down. तो ये जो है, ये दो चीज़ जो है वो हेजिंग की रिस्क लेने से ज़्यादा महंगा वो कॉस्ट है, और वो हर एक के बस का काम भी नहीं है. कई बार अगर 2 महीने हो गए और अपना ऑटोमेटिक कट हो जाता है क्योंकि कॉन्ट्रैक्ट ख़त्म हो गया, मुझे 3 साल के लिए 4 साल के लिए हेजिंग करना है, तो मुझे आज ही 10% से ज़्यादा हेजिंग कॉस्ट आ जाएंगी. तो जितनी मैं रिस्क नहीं ले रहा हूँ उससे ज़्यादा तो मेरी हेजिंग कॉस्ट ही हो जाती है. तो कोई है कोई ऐसा प्लान या कुछ ऐसी कोई ऐसा नया कोई चीज़ है जिससे हम लोग 1 साल के लिए हेज कर ले, 2 साल के लिए कर ले, क्योंकि अभी हेजिंग करने जाएंगे तो 1500 रुपये हेजिंग का प्रीमियम है.
So I'll just come to your point again. Okay, I understand your pain point. We didn't have an avenue, now you have an avenue.
Can we repeat it, what you had said for the avenue?
So now with IIBX, you have an hedging mechanism on the exchange. Plus banks have been allowed to take OTC positions on your behalf, where you can go and hedge your position and they will do a back-to-back for you. And sir, to answer your question, now, first of all, your 3-4 years hedging is not the business model that is currently operating in India. So 6 months is your current gold loan period according to the regulation. And beyond that, you can roll it over to an extent of 1 year also in international market. That's not an issue. And that's why the OTC hedging, which the new circular that I referred to, will help you with. Earlier, you didn't have an avenue, and I agree with you. You had to take that pain. And I was with you on that. But today, since it is available, I'm trying to educate you that this is the option available for you, which will only help the industry. So see, that's what I said, that you'll have to talk to. So this has just come up on 15th of April. So every bank will have to get their internal approvals and checks and balances in place. But then, let's say HDFC Bank you're working with over here, or RBL you're working with in India, with same IBU you can hedge your position in international market. So on one side, if the HDFC you are short, on the other side you are positive.
But in the international market also the future is at least 2-3% higher than the present. If you heard about the China, the 10% is premium.
That is forward premium. वो 2 महीने का forward premium है sir, which is interest cost.
हाँ मतलब आई गया कॉस्ट बहुत हेवी हो गया.
So वो OTC market में वो नहीं होगा. When you go to hedge your position in OTC market, you will not pay premium on that. You will pay the current price plus the hedge forwards.
Like you said, but the exchanges that are currently hedging, they say we hedge your international gold price, the import duty, as well as the exchange rate in one single.
Import duty can't be hedged because that changes every.
No, that's the MCX contract is including the
talking
import
about-
duty.
They are taking the landing cost of your goods. All the costs that is included in that, that is the landing cost.
That's
To add to Thakkar, I will add one more point. If you are a small businessman, like the chairman was asking, the issue there is कि you have to see what is the stock holding period in your counters. If your stock holding period is very less, like I heard on the Akshay Tritiya day, I asked a client, he said they sold 1100 crore. If you are selling 1100 crore in a day, then your stock holding period is very less. In the company.
no, sir. You must see that person's stock also.
Yeah, no,
when,
I'm
when
telling
you are
you.
saying 1100 crores, he had a stock of 110,000 crores. From that, he has sold 1100 crores.
I'm coming to that. I'm telling you कि you have to look at what is your stock holding period in your showcases. If you are not keeping the stock for 6 months or something, sometime even within the period, if you are able to sell it, and if there is a festival or something, then you don't have that outstanding risk. And if you have no outstanding risk, then you have no need for hedging. The hedging is a function of the risk that you are carrying in your business. To reduce your risk in the business, hedging is required. Hedging is to help you reduce your risk. But you have to first specifically identify how much of your exposure, in your opinion, is riskier. How much of the and how much is really getting quickly sold or getting quickly replenished. So those who are getting replenished, that is also an opportunity for you to deal with your risks. So this is something you don't have to be very a mathematician to know that. This is your commercial business. So I think most of the time in our business, in this gold business or diamond jewelry business, the issues have been a call a businessman has taken. So that becomes makes things a little easier probably. Then like my panelists have said, you can probably deal with this with all the options available. And you have to take that is a cost for doing business. That is the landing cost of gold in your counters. So our friend will go. So we will be, you have a question?
Last question. Suppose I heard one case where the company has got a BBB rating. We are not satisfied with that rating. We moved to some other rating agency where we improved 2 notch above that. But then in that case, the bankers have accepted my BBB plus or A minus rating. But the earlier rating company, where we didn't cooperate later on by submitting the data, they are publishing all the reports of non-cooperation and they are spoiling the records. So what is the rule? And we have closed that matter. Means before the expiry of their contract period, we intimated them and we have closed all the issues and all that. Despite that, they are collecting the penalty and all that, and they are totally non-cooperation.
So I think maybe we can discuss this offline because this is a detailed matter that we'll need to understand what is the issue.
Okay, thank you. I think our colleague will go, so we will close it here. Yeah.
Thank you very much. Let's put our hands together for the entire panel. I'll request Mr. Nitin Khandelwal, past chairman GJC, and Mr. Ravi Prakash Agarwal, convener Gems and Jewellery Banking Summit and COA at GJC, to kindly help us felicitate each of our panelists. Mr. Manish Gavaskar, Mr. Manish Gavaskar. Mr. Mehul Thakkar. Mr. Hemang Sharma. Mr. Avinash Gupta. And our most distinguished moderator, Mr. Bijayananda Patnaik. Can we have a quick group photograph? Can we have a group photograph with everyone here on stage? As I say thank you once again to Mr. Manish Gavaskar, Mr. Mehul Thakkar, Mr. Hemang Sharma, Mr. Avinash Gupta, Mr. Bijayananda Patnaik, Mr. Nitin Khandewal and Mr. Ravi Prakash Agarwal and Mr. Sayam Mehra on stage right now.
Mitesh, photo thanks. Mitesh, go ahead.
Ladies and gentlemen, I'd like to request Mr. Mitesh Dhorda, Secretary GJC, to kindly thank the many people who have made this such a memorable event.
Yeah. Next year's date also, on the 17th of May, which is a Saturday, we will again have this event. So, Mitesh, next year, 17th of May, which is Saturday, we again will have this event, the Banking Summit. And
we'll add more topics as
yeah,
well.
we'll add more topics as well. You can take a lead in this. And thanks to Sunny Bhai, to Dr. Jita Rani, who's done very hard work for this event. So, congratulations to her. Thank you to Hugo, Ninad. Nitin is also working very hard. Yes, Shrishti is there. And Nitin Bhai, Ashish Bhai, Ashok Bhai and Harish Bhai who've come here. Thank you to all the past chairmen. Again, over to Mitesh.
Thank you, Chairman sir. So this summit was very much required. And like Chairman sir said, that we'll be keep on doing this summit year after year. So on behalf of GJC office, entire office, I'd like to thank Sayam Bhai, Rajesh sir, Ravi sir, Sunny Bhai and the entire COA and the committee members for their faith and support given to the GJC office. Special thanks to the panelists for giving us their invaluable insights and giving us the time. And I'm sure the industry has learnt a lot, and in future we look forward to a more mutual and understanding between each of these sectors. Special thanks to the audience who have given us the entire day, jeweler colleagues and friends from the media as well. And thanks to GJC office, Nina, Jitaranji, Sumit, Shrishti, JP, Ruchi for managing this event very well. And Monday is going to be a big day for us. I would request all of you not to go for a weekend, but please cast your vote. It's pretty important for all of us. Thank you and God bless you all.
Thank you, sir. Thank you, sir.
Thank you very much, ladies and gentlemen. Thank you to our title partner, World Gold Council, powered by Sri Kunj Kolkata, supported by Bangalore Refinery, Mukti Gold and Diamonds, Yes Bank, and Lakshmi Diamonds, Bengaluru. Ladies and gentlemen, good evening. Thank you very much. Do join us for high tea, which is served outside. Thank you.